Lanre Ido. There's a ray of hope that the economy may improve as the latest statistics show that inflation rate in the country dropped marginally for the first time since 2015. According to the National Bureau of Statistics, the inflation rate dropped from 18.72% in January to 17.78% in February 2017. Now, it is the first time in 15 months that the Consumer Price Index has declined on year-on-year basis, and despite the progress seen in the core inflation rate, food prices remain on the rise with a surge in the food index from 17.82% in January to 18.53% in February. Well, the government saving bond, which opened for subscription exclusively on the Nigerian Stock Exchange on Monday, is expected to boost financial inclusion. Executive Director, Capital Market Division of the Nigerian Stock Exchange, Haruna Jalo-Waziri, says to ensure the offer reaches the last mile subscribers, the Debt Management Office has accredited 87 stockbroking firms to market and distribute the savings bond. The retail bond issued by the DMO will be offered monthly in tenors of 2 and 3 years with quarterly payment of interest to investors. It's also aimed at deepening the national savings culture and provide opportunity to all citizens irrespective of the income level. Well, the ED, Capital Market Nigeria Stock Exchange, Haruna Jalo-Waziri, spoke to me earlier on this latest issuance.
This one is open from Monday to Friday, so that retail investors can be aware of it, approach their brokers and subscribe through them. Now, when comes Friday, the brokers will aggregate all the subscriptions and forward both the applications and the money to the federal government broker, which is in this case Stanbic IBTC stockbrokers. Stanbic IBTC will sit down with DMO and allot the subscriptions. So on the third day of next week, the CSCS will send an alert to each individual subscriber, telling them how much to subscribe and ensure them that their bonds are in the CSCS for possible trade if they want to exit. Now, the second thing is that the bond is going to be, the coupon is going to be on a quarterly basis. Typically, government actually issues coupons on a half-year basis. Again, it's to increase the liquidity for savers to be able to have money on a consistent basis to be able to use it. What is the alternative that the retail investor has on the street? 30,000 naira, 20,000 naira, 50,000 naira. Is he likely to go to a bank and see an account officer? It's highly unlikely. What is he likely to earn on the alternative? In his savings account, maybe 3%, maybe 2%. So the thing is, if you compare what his alternative is to what the DMO is giving right now, I think there's a far difference between what is the alternative. Secondly, this is the first start. We will see how market reacts. If there's resistance, the DMO has to revisit the price. But again, let's start with this one. Let's see how it works, and then we improve as we go along.
All right, let's discuss this savings bond further. And joining me via Skype to do that is an investment analyst at GTI Securities, Chukwuma Ayamu. Many thanks for your time, Chukwuma. Now, in what way is this savings bond different from other existing bonds of the government?
Okay, so before now, we had somewhat an elitist kind of bond issuance. People used to require a lot of funding before you're able to participate in bonds. But the FG savings bond sort of brings it down to the man on the street. The minimum subscription requirement is 5,000 naira. And at least that's above minimum wage. It gives room for a wider coverage of people, to subscribe. So yes, we are looking at an improved financial inclusion product that the CBN is coming, the federal government is coming up with. And what is particularly fascinating is the fact that if you look at the wider percentage of people who make up the lower and the middle class people in Nigeria, you find out that they are more compared to the upper class people. So it is going to be covering a wider range in terms of participation, and that's something that we all look forward to, and it's a very, very welcome development. So financial inclusion, it makes it easier for the man on the street to be able to participate in what was previously known as an elitist investment.
Yeah, a welcome development from you, Chukwuma. Now, the DMO says it is using this instrument to revive savings culture in the economy. Let's look at the savings attitude of Nigerians, really. What's your impression?
Low, very low. Because the truth is, you can only have a savings culture when you've been able to meet basic requirements, basic needs. I mean, it will not occur to you to put out anything for your future earning or for your future consumption when you're barely able to meet the immediate consumption needs. So yes, it's been very low, but with this kind of product, it would get people more aware of the fact that it's actually an imperative for you to consider putting away something from what you earn now. So with as little as 5,000 naira, which is something that people can part with and not get broken. And it's something that you can continually do, because I think the government is going to be bringing out fresh issuances of the savings bond going forward. At least that's our expectation. So it is low, but this kind of product will actually give a boost to savings culture in Nigeria.
Yeah, this bond is also expected to increase liquidity in the market. Looking at, I was speaking with the ED Capital Market earlier, and that was one of the things he actually said is aimed at doing. But in your view, do you think is actually going to actually do that in the market?
Yes, absolutely, I think so. Because a lot of people have lost faith in equities, and that's not perfect. A lot of people invested poorly or were victims of weak regulation in the capital market during the 2008 market recession. So a lot of people generally lost interest in equities. They no longer believed in the principle of equities. And those as such stayed away from the equities market. But with the savings bonds, with the backing of the federal government and what the federal government stands for, which means they are able to come through on their coupon payments promptly and as well as at when due. Um, and the fact that it's also listed on the exchange, it means that more people will be willing to come to the exchange to participate in securitized instruments, buying and selling of share of the bonds, and that will reawaken people's interest and make them see opportunities in other asset classes, e.g., shares. So yes, it will boost liquidity, market participation will be better. I think that's spot on. That's absolutely what is going to happen. It will boost people's confidence of coming back to invest in
Yeah,
securitized.
it would boost confidence from your end, but from antecedents and the attitudes of Nigerians to bonds, to coupons generally, especially when it comes to long-term investments, do you think it's actually going to yield the interest of Nigerians?
The thing is, like Jalo Waziri pointed out, what's the alternative? You probably put say 20,000, 30,000 naira in a savings account and you earn 3%. Inflation before now was 18%. It's even a positive that it's coming down now, closer to the 13.01% that the coupon on those on the FGN savings bond is paying. So yes, it the alternatives are not much, quite frankly. And it is not. It's a 2-year instrument. The maturity is in 2 years, and with the economy getting better, getting stronger, inflation being the major thing that impairs returns on fixed income instruments like bonds. If we're able to get our strategy right and inflation continues its downward its descent, then of course it's something that will be beneficial to the investor. So yes, it offers a more viable alternative to investment than just putting your money in the bank for 3%.
It is. All right, Chukuma, just yesterday, the National Bureau of Statistics released a consumer price index for the month of February, and it indicates a slight drop in inflation rate. In your opinion, what factors do you think is responsible for this, especially looking at, of course, it didn't in any form affect the core inflation rate, talking about the food prices, which remained high?
It's positive. First of all, this is the first time in 15 months that we are seeing a reduction. Almost all through last year, as a matter of fact, we saw a persistent increment in inflation on a month-on-month basis. So it's positive that we are seeing a reduction in inflation now. Um, the thing is, what we've been dealing with in Nigeria has largely been cost-driven inflation, and that's because exchange rates for the exchange rate has been seriously impaired. The naira has weakened significantly against the dollar, and that has given a rise to the cost of imported products. Any same price in dollars, um, when you compare it to a naira denominated income, is higher. And because Nigeria is an import dependent country, food items, some of the things that we import, raw materials for a lot of the manufacturing companies has actually been on the increase. And that has been directly passed to the end users, which is you and I. And for the fact that we've not had any increment in our base income, that naturally gave a rise to inflation that is cost driven. So that said, we are beginning to be more proactive with our strategy towards curtailing or fixing the exchange rate problems. I think it's still a long shot. A lot still needs to be done, but I think we're beginning to get our thinking caps on. At some point, there was a huge clamor for the free floating of the currency, which the CBN vehemently fought against. But for some reason, over some period, they've been also able to look at it on the merit of what it's worth, and there has been a need to, reduce the value of the naira against the dollar, so that they can have a trickle down effect on investor confidence, so that we can have improved participation of FDIs, which will invariably also lead to a boost in our local economy. So we're beginning to get things right, and it's reflecting on the inflation numbers. And as well, at the same time, we've had a 15-month period of a persistent increment. Food inflation will not come down all of a sudden. The core inflation, like you pointed out, but it's a step in the right direction, and I hope this trend continues. I hope we're able to continue with our proactiveness with trying to solve the exchange rate crisis, because that's largely where the inflation is springing from. And if we
Yeah.
continue to do that, yes, then it's going to be a sustainable trend.
Yeah, no doubt is a positive one at this time. And no doubt the savings bond is also coming at the right time, even at the rate that the inflation is still at 17%. This savings bond is at 13.01%, as it is way lower than the inflation. Now, how do you think it would affect investor earning?
Oh, that's a very brilliant question. The thing is, a lot of people, and I've had to have these discussions with a lot of people. There is a difference between treasury bills and the returns on treasury bills and, of course, bond. Bond is a 2-year instrument, and you can imagine that in a month we've had this kind of reduction in inflation. So if we're able to get our act correctly before the end of this year, we'll probably see, or the middle of next year, we'll probably see inflation at about closer to either the interest rate at 13.01%, or even more aggressively getting close to its single digits, in that we've had it for a long time. So I think because of the long-term nature and the fact that bond instruments are longer term than most of the other instruments, it can accommodate um, some form of headroom from inflation, and it will compensate in maturity, particularly if you're able to keep your the fiscal policy and monetary policy in check. If you're able to effectively deploy them, it will compensate in the long term. So it's yes, inflation is the major disincentive for investing in bonds, but because of the long-term nature, I think eventually it will come through.
Yeah, let's get back to the stock market. We have seen some listings in the market so far. Is it safe to imagine that the market has recovered from the losses of 2016?
No, it's not. We still have a larger play of retail investors compared to the more sophisticated institutional investors and FDI participation. So what we see now is, as soon as there is a rally in price, you see profit-taking activities, which further depresses the market again. And until people who have the sophistication to take a long-term outlook on companies and their performance, you would not see the stability that is required to give the market the kind of boost it needs. So as of now, it is early days, but absolutely this is the best time to invest, because you don't want to invest when the more structured institutional investors are back in the market. They would have jacked up prices and they would retain it at a level. So you would need to start scrambling with the people who have more money, can do more value volume, and are more longer term. So it's better you buy before they come back into the market. So now valuations are very cheap. Is the best time for a savvy investor to get back into the market.
Yeah, the best time coming from you, Chukuma. So let's look at forecasting, a very quick one now. How do you see the market heading in the first half of the year?
Nothing much has happened in the first half of the year. We've done quite a lot with monetary policy. I think a lot of people have flogged the issue of monetary policy a lot. I think what we need now is some responsiveness from the fiscal arm. We need the budget passed. We are tired of the long rhetoric about what's going on with the budget. It should be passed and implementation should start. Because as soon as that happens, then there is real growth in the real sector. If that happens, you begin to see a boost in manufacturing. Construction will begin to take center stage. The government will begin to deploy its resources into trying to build infrastructure, which is thoroughly lacking at this time. And economic activities will generally be boosted, and that has a trickle-down effect on disposable income. So we need the budget to be passed quickly and get around with the business of trying to grow our very weak infrastructure, and as such, we begin to see a genuine boost in the economy. So for now, I think first half of the year will not be very dramatic, but my expectation is that by third quarter of this year, we would have probably been getting closer to exiting the recession. And by that time, I think there will be more optimism shining through into the Nigerian economy. So for me, first half is going to be a rebuilding period. And the earlier we get the budget passed, the better.
Yeah, I share your optimism in your forecast. An interesting and insightful analysis, Chukuma. Many thanks for your time on Business Nigeria.
Thanks for having me.
Well, the Nigerian government says it will sell the indigenous steel complex in Ajaokuta to private sector operators, and the idea is to enhance operations of the company. The Minister of Mines and Steel Development, Kayode Fayemi, made this known recently in Abuja, where he noted that the government was putting huge capital and infrastructure to the steel complex, but the company would no longer be run as a public concern. The Ajaokuta Steel Complex was recently recovered from an Indian firm after revoking a concession agreement. Transcorp Power has inaugurated a gas turbine at its Ugeli power plant worth $28.3 million. 620 megawatts of electricity will be added to Nigeria's national grid as a result of this latest investment. And the company said in a statement that the inauguration of the turbine was part of its commitment to generating 25% of Nigeria's total power output before the end of 2018. Chairman Transcorp PLC, Tony Elumelu, says the company has resolved to double the generating capacity of the power plant within the shortest time. And according to him, Transcorp Power remains committed to finding a solution to the power problem in the country. Expired household consumables and cosmetics worth billions of naira has been impounded by the Standards Organization of Nigeria, SON. Operatives of the Standards Agency made the seizure at a 3-story building of 14 flats warehouse in Lagos, where products that had expired since 2009 were repackaged by a syndicate that specializes in importing substandard and expired goods into the country, which was discovered at the warehouse, which includes baby diapers, sanitary pads, body creams and detergents, among other household items with expiration date between 2009 and 2015. The agency says it has already kick-started the process of recalling the products out of circulation and will prosecute the importers in line with the SON Act of 2015.
Most of these products have expired many years ago, and there is no evidence that these products are not sold out, as it were, to the public. Most important is the nature of the products. When somebody buys expired cream, what does it show? You are taking cream that the active ingredient has gone, and what it may do is that it can react on your skin. What they are doing here again is that they will pick those expired ones and put into these wrappers and use them as if they are new. We have sealed up the whole building. We are going to carry out further investigation. Process of recall to now use those people that they have supplied. We'll be able to find out the status of those products, how they brought them in and how they supplied the status of the products, whether they have now cleaned them up and put new dates on them. And that will help us in the process of recall.
Well, crude oil prices remain mixed in the global market on Wednesday. At the London market, the Brent trades for $51 a barrel as the price moves up by $1. The OPEC basket price drops to $49 a barrel, showing a drop in earnings by producing nations. Well, that's Business Nigeria. Many thanks for watching. I am Yemisi Lanre Ido. I leave you with the figures of the exchange rate as it stands.